the shutters down and turn the lights out on millions of square feet of office space for almost 2 years. But how is the sector coping with the creep back to physical office presence and the large amount of multinationals that are now based here in Ireland? To discuss, I'm joined now by Shane Duffy, who's Director of Office at Savills. Shane, thanks very much for taking the time to join us today.
Hi, Mandy.
Now, we've heard an awful lot about private housing and the private rental sector, but how does the commercial sector look post-pandemic, Shane?
Probably a lot healthier than people might give credence to it, Mandy. I suppose we've had a turbulent period over the last 2 years. I'm primarily focusing on the office market. We had our Armageddon moment around March 2020 when the pandemic hit. I think the reality is, even at that stage, nobody really knew what the future of the office market looked like. We went from a very healthy scenario pre-COVID to kind of a turbulent period, question marks over just what the future of the office was going to look like. And I'd say, fast forwarding even 2 years from then, a lot of occupiers are probably still not certain. If we generally measure the health of the office market based on the quantum of take-up or the vacancy rates in the market, not necessarily the rents that are being achieved. So if we look at it holistically and in simplistic terms, there's probably about 45 million square feet of office space across Dublin City. That includes vacant and occupied space. So if we look at pre-COVID scenario, Mandy, we've seen a healthy level of take-up in 2018 and 19. In fact, 2018 was a record take-up. So across the market, just to put it in simplistic terms, there's about 45 million square feet of office space that's occupied and unoccupied.
And what's the percentage there? Like, how much is vacant?
We're looking at about 8% year on year. So again, general consideration would have been that should have risen during the COVID period or certainly beyond that. It's generally remained steady. It's been quite consistent. It obviously ebbs and flows year on year, just depending on the quantum of take-up. But it's been remained consistently steady, even over the last number of months post-COVID.
So we're essentially back to where we were in 2019, is that right?
I wouldn't say we're just at those levels, but there's certainly a lot of positive sentiments around the market. I think we went through that period of turbulence where we didn't necessarily know what the future of the office environment was going to look like. A lot of occupiers are still trying to get their head around what it looks respectively. I suppose there's no one-shoe-fits-all solution. What works for one occupier doesn't necessarily work for others. I think the general consideration would have been that tech occupiers might look to offload a lot of their space. And bearing in mind, some of these occupiers are tied into long-term leases. The majority of them don't physically own their real estate in Dublin. We expected during that COVID period that many of them would look to offload a lot of their space. That didn't happen. I think one of the reasons for that is that, I suppose, in an international context, Dublin is a relatively small city. So, a big tech firm in Dublin might only have maybe 200, 250 employees, which would translate into about maybe 20 or 30,000 square feet. Now, that might compare to some of the bigger cities globally. And they might have up to 500,000 square feet. So when it comes to actually shedding space in the Dublin context, generally doesn't move the dial that much, so they're not as sensitive towards it. So a lot of them have just retained what they've had. Obviously, their density levels and their occupancy ratios have reduced, in some cases maybe significantly. In many cases, some of the occupiers mightn't necessarily have repopulated the office to where they were pre-COVID, but the level of footprint that they have has generally remained stable. One other thing that we've noticed is that obviously, particularly in the ICT sector and indeed in financial services, there's been an increase in office-based employment to the extent that we've probably seen since 2019, about 100,000 new employees across the tech sector and financial services. That would typically translate into about 1.5 million square feet of physical office space if all of those employees were to gravitate towards an office. So I think what we're seeing is that employees are generally increasing across the board, particularly in the tech sector, but the quantum of office space they have has generally remained consistent. In some cases, obviously, they've reduced it to an extent.
Some of the figures there, Shane. Companies signed up for almost 500,000 square feet of office space in the first 3 months of this year. Does that mean that the working from home theory is over, or there are just more people working in offices now?
I think it's really down to the fact that there's more people physically working in an office environment. By the by, Certainly, as I mentioned, I don't think we've got back to the levels we were pre-COVID. What we're seeing is that most companies have adopted a hybrid model. Now, a hybrid model that works for one occupier doesn't necessarily work for another. So I think it's probably prudent for each individual occupier just to figure out exactly what or how many office employees are going to physically come back into office on a day-by-day basis. What we've typically seen is, just in a general demographic perspective, is that the older cohort are generally quite happy. A lot of these people have obviously done their commute time over the years, and they're generally living in suburbia or outside of the city, and they're generally quite content to stay at home. The younger staff generally want to get back into a working environment, because obviously that's where they learn their trade. Obviously, there's an out of sight, out of mind perspective in all of that as well when it comes to promotions, bonuses, and just general considerations like that.
If you're just tuning in, you're listening to Newstalk's Taking Stock with me, Mandy Johnston. I'm talking to Shane Duffy, who's Director of Office at Savills. Shane, what about that issue of the Great Resignation? We've seen a lot of companies very, very, tentatively dealing with their staff because the drive for talent is so difficult at the moment. HR people terrified to move at any kind of pace that workers are not comfortable with. That has caused landlords a lot of difficulty over the last 2 years. But is it time now that those smaller landlords who've had to deal with those issues, that there's a sense that it's a seller's market for them now?
Not necessarily. I suppose it depends on their own exit strategy, depending on what properties they have. I suppose when it comes to that period, what we've generally seen, Mandy, over the last 2 years, I suppose there hasn't really been much precedent for it, but landlords are typically finding that with leases are not being handed back, or if they have a vacancy rate within their building, they're generally in a position to fill it. I think the key trend we're seeing, the key emergence that we've seen, and it's really accentuated itself over the last 2 years, is the emergence of the ESG agenda. So ESG obviously stands for environmental, social and governance. And effectively what that means is that there's a flight to quality across the market. So occupiers are typically trying to get the best piece of real estate they can find in the best location to ensure that they can attract and retain the right staff. So that war for talent is the primary consideration for occupiers when they're considering their real estate strategy. So if you look at it in a Dublin context, there's probably less than 20% of all commercial office buildings that would actually tick that ESG agenda for occupiers that have the sustainability credentials.
That's interesting. So the building can be part of your ESG evaluation, and that companies are taking that into consideration now.
Very much so. So what we've seen in recent times is a lot of occupiers have gone back for older stock buildings where they've got themselves maybe a pretty good deal during COVID, but they're in older stock buildings that are not energy efficient, not sustainable, and when they look for board approval, maybe back in the West Coast or elsewhere, they're generally turned down because it doesn't comply with the ESG strategy or indeed the corporate social responsibility strategy of these firms. So there is an absolute flight to quality.
Yeah, and I want to talk to you about some of those bigger commercial entities in a moment, but can I ask you about rural office space outside of Dublin? What's happening there?
I suppose the general consensus would have been is that there would have been an emergence of more activity in provisional office space, or certainly rural office space. Hasn't necessarily happened to the extent that we would have expected. If we look at even just Dublin holistically, suburban office market has actually reduced in terms of the level of take-up and quantum of activity over the last 2 years, where you would have expected there would have been a lot of people kind of removing themselves from a CBD location. There's generally not a great provision of office space outside of the city, Mandy. It's generally prudent for all FDI occupiers coming in to Ireland to look at the major urban hubs around Cork, Limerick, Galway, Dublin, and to a lesser extent maybe the likes of Athlone, Waterford, and some of those areas.
Yeah,
we don't see much activity.
That's very interesting, Shane, because the reason I asked that question is because a lot of people have moved outside of Dublin. I'm hearing of a lot of people moving to maybe not just rural Ireland, but bigger urban centres and using that opportunity. So I thought maybe there'd be a development towards remote working hubs. You don't see any of that in a large scale?
It's in its infancy. It's infancy. It's certainly something you would have to assume we're going to see a lot more of. It hasn't really taken off to the extent that you might have expected yet. But we're generally seeing that the reason people are moving to rural locations is that they can work from home. So they might be based in, whether it's on the West Coast or elsewhere, and they might commute to Dublin or to big urban centres once or twice a week, if there's a need, if they have to attend meetings or in-house activities. But we don't necessarily see them moving, say, from Dublin to a smaller urban district around the country, because it maybe in some cases defeats the purpose.
And what about those big commercial entities that you mentioned earlier? Talk me through some of the bigger deals that we've seen over the last 2 years. Who is locating here now? And does that drive up the presence of those multinationals drive up the cost price of rental office space in Dublin generally?
It does. It has around the traditional office address of St. Stephen's Green and that general hinterland. The supply of space around that area, Mandy, is quite definitive. It's limited, and there's quite a strong demand. It goes back to that flight to quality emergence that we've mentioned a few moments ago. So these occupiers are generally less sensitive about the rent per square foot they'll pay. The key is to ensure they get the right space, the best space they can, and they're generally in a position to pay a premium rent for that type of product. In terms of the type of occupiers we're coming in, we're still seeing a strong reliance on FDI activity, primarily coming from the tech sector from the west coast of the US. What we typically see and have seen over the last number of years is they generally arrive initially in a small quantum, to take short, flexible leases, and then they expand into a much bigger profile. And it's not just from America. We're obviously seeing TikTok emerging here in recent times. Obviously, they went through a period of elimination when they were looking at their European destination. It actually came down to the UK and Ireland pre-Brexit. They chose Ireland and have now ramped up their occupancy levels. In Dublin, they're continuing to look at a number of properties, one or two that we're involved in. But their first employee only came to Dublin in late 2019. They now have close to 3,000.
Wow.
They need a lot of office space to accommodate that, and that's only really kicking off.
Wow. So Shane, before I let you go, say I'm in a small business, I'm based in Dublin 2 or Dublin 4. I want to try and get your prediction for 2023. My lease is about to run out. What should I do? There's a global downturn on the way, cost of living crisis. What's your advice to me?
I think shop around, Mandy. I suppose there's still a healthy level of availability. If you're really focused on being around St. Stephen's Green, then you're going to come up against a lot of competition. But if you don't necessarily need to be in that immediate hinterland, if you've got a little bit of flexibility in terms of location, I would say bide your time. There's some very attractive locations around the North Docks, South Docks, and even in maybe some more traditional fringe locations. So if you're not absolutely location sensitive, I think there's great deals to be had across the market.
Okay, well, Shane, thank you very much for taking the time to take us through those very interesting statistics. It's certainly an awful lot healthier than what we're seeing on the personal and domestic front. But for now, we'll leave it there. That is Shane Duffy, who's Director of Office at Savills. Shane, thank you so much for joining us today.
No problem, Mandy. Pleasure.
This is Mandy Johnston with you on Newstalk's Taking Stock. The QAnon movement, its history, who's behind it and why it's making the news all over again. That's after the break.
The sun, the sand, the breakfast buffet. There's a lot to miss coming